Hi, this is PR Sundar. Welcome to this episode where I am going to talk about an important issue. You go to US, there will be thousands and thousands of hedge funds are there. But in India, you hardly hear about these hedge funds. I would say practically there are no hedge funds. There are few, but not many. And look at the options trade in India. NSE is the largest derivative exchange in the world. As per some report, the amount of money, so that is playing in futures and options, the volume is more than 400 times the amount of money that is involved in cash market. So the volume in F&O, the volume in cash, the more than 400 times. And as per that news, the second highest in the world is only 36 times in Germany. The options volume in India is much higher than even the US. When there is so much of action happening in futures and options, what is a big problem? There are people, who try to entice the retail people and they say, I will manage your money, you give me, right? And they take the money, so they trade on other people's behalf and they lose the money. So that creates a hell lot of a problem. So managing other people's money in India, it is illegal. It is not correct. It's wrong as per the law. Is it right or wrong? That's altogether a different thing. There was somebody was telling me, sir, in this country, a man sleep with a woman with her consent. It is not a crime under the law. But if a man manages other person's money even with his consent, and that is a crime under Indian law. But with his consent, you can manage his money in any other business. You can take money from your friend and you can set up a restaurant. That is not a crime. Or for that matter, practically you can do any business in India by taking money from somebody else, and with his consent, it is not a crime under law. But if you take the money from somebody and if you trade in his account with his consent, so it is a crime under the law. So why this is happening? So what is the best way to avoid this? But these kind of problems are not there in other countries. Why? Because other countries, the people go for a legal structure called hedge funds. So first let me tell you what is an hedge fund. You have heard of mutual funds. So what is the basic difference between mutual fund and hedge fund? In mutual fund, people pool in the money. So all the people put the money into one company, the mutual fund company. So that company trade in that company's name. But they are allowed to trade only in the cash market, only in the equity market. They are not allowed to take any leverage. They are not allowed to touch futures and options. Of course, they are allowed to hedge their positions in futures and options, but they are not allowed to take any view of the market and so on. Suppose, if I want to set up a company where I want to collect money from other people, then I want to trade in futures and options. Is there any legal way? Yes. The hedge fund is available in India also. But in India, they don't call it as hedge fund, they call it as alternate investment fund category 3. I can set up a company and I can register myself with the SEBI under alternate investment fund category 3, and then I can collect money from other people and I can trade in that one company account, and later whatever is the profit I can distribute it to the people. But practically there are no companies in India. Why? First, let me tell you what are the conditions. The conditions are so simple. There must be one promoter. Promoter must bring at least 5 CR. That's not a big deal. You can take money from people not less than 1 crore. From each person, you are not supposed to take less than 1 CR. Each person, you can take more than 1 CR. That is also not a problem. Your minimum corpus means your own contribution plus client's contribution. That total must be minimum 20 CR, That's also not a problem. So these are all like small issues and everybody can comply. But still, why there are no hedge funds in India? So there is one clause. That clause says you cannot take more than 2 times leverage. So what is the meaning of 2 times leverage? Say for example, I feel that Nifty will not go above 20,000 or 21,000. Nifty will not go below 19,000. So I am selling one 21,000 call and selling 19,000 put. You may be trading hardly 10-20 rupees. So I may be collecting about 2,000 point premium. So the margin deployed for this strategy is about 1 lakh rupees. So if I put 1 lakh rupees, if I get 2,000 rupees, so that works out with 2% return per month, So 2% per month, which will translate into 25% per annum. So that is a decent return for the risk taken. So this is how most of the option traders do. But as per SEBI rule, when you sell a call option, that means you have already used 10 lakh rupees. Because when you sell a call option, 20,000 call option, you may be selling for 10 rupees only. But they take the total contract value. So 20,000 into 50, that is 10 lakh rupees. So you have already used 10 lakh rupees. So you go and sell one call option, you already used 10 lakh rupees. You go and sell one put option, you already used another 10 lakh rupees. So your maximum exposure is 20 lakh rupees. Actual money deployed is only 1 lakh. So I'm just giving an example. Let us say I take 10 lakh rupees. So if I take 10 lakh rupees from you, what happens? If I sell one call option and one put option, so SEBI says you have used 20 lakh rupees notional value. So that means you have given 10 lakh rupees. So I cannot take leverage more than 2 times. So that means more than 20 lakh I cannot take position. When I sell one call and one put, 20 lakh is already been used. So that means by taking 10 lakh from you, I can just sell only one call and one put. That's it. If I sell one call and one put, I'm going to get 2,000 rupees. But 2,000 rupees gives 2% return for the margin deployed. But your capital is 10 lakh. For 10 lakh rupees, if I earn 2,000 rupees per month, okay, so that is not 2%. So that is 0.2%. So if you get 0.2% per month, you are going to get about 2.5% per annum. So who will want to invest money for getting 2.5% return per annum? Rather they would put the money in bank FD, they can be happy, right? So this clause, 2x leverage, the maximum you can take 2x leverage. So this is the reason why there are no hedge funds in India. But if SEBI removes this clause, if they give freedom, as long as the people who are handling the money, they know what is the risk and what is the reward, as long as the people who give the money to them, if they know what is the risk and what is the reward, so if they are allowed to trade with whatever is the leverage they want, so then I think 90% of the illegal PMSs will close down. So they all will come to the legal system. Everybody will register their hedge fund with SEBI and they will do it. And what are the advantages? Once people register with the SEBI and they do the hedge fund, so every month or every quarter, they have to report to the SEBI about their performance. So the people will also know the performance of different hedge funds, the risk taken by different hedge funds, reward generated by different hedge funds. So that will create a healthy competition among the hedge funds, and people also will not be getting cheated. They'll be able to see the performance of these funds for the last 2 year or 3 year or 5 year, and accordingly they can make informed decision. This 2x leverage, people who are trading in options, they cannot comply with that. Now, I tell you one story of one of my friends. So one of my friends has set up a hedge fund, and what he has done, he wanted to comply. Of course, once you set up a proper hedge fund, which is called alternate investment fund category 3, you have to comply with all the rules. Suppose you have given 10 lakh rupees to him, okay, he is not supposed to take position for more than 20 lakh rupees. So what he has done, I'm just giving an example. So he analyzed the market. Nowadays, the PSU banks are doing extremely well, but private sector banks are not doing well. Especially, HDFC Bank is, because of merger, there are a lot of issues, this and that. So he study like this. Then what he do? He go long in State Bank of India and short in HDFC Bank. So I'm just again saying a disclaimer, this is just an example I'm giving. This is called long short fund. So long short fund means they take long position also, they take short position also. So what is the logic? If suppose market goes higher, HDFC Bank goes up by 4%, State Bank may go up by 5%. So the difference is their profit. Or in case if the market goes down, if State Bank goes down by 5%, HDFC Bank may go down by 6% because HDFC Bank is weaker than State Bank. So still they will get profit. So of course, the risk is also there. Let us say tomorrow something happens in HDFC Bank. HDFC Bank alone is going up, whereas all other banks are going down. So that risk is there. But what these people do, they analyze like this. So 10 stocks they go long and 10 stocks they go short. What happens, market goes up or down, their loss or profit will be minimal. But due to the research, they choose the right stock for long side, right stock for the short side. So they get some profit. So here what my friend has done, he wanted to go long in State Bank of India. He bought it in cash market. Say for one lot of equivalent of State Bank of India, let us say 8 lakh rupees. So he go and buy in the cash market. So cash market, when you buy for 8 lakh, there is no leverage. With the remaining 2 lakh, he shorted one lot of HDFC Bank. So one lot of HDFC Bank is short. You may be paying only 1 lakh as the margin money, but SEBI will take it as about 8 lakh or 9 lakh of total contract value. So you go long in cash market and go short in future market. So one lot equivalent there, here one lot. You might have spent about 9 lakh rupees from your pocket, but as per SEBI, you abide by the rules because State Bank of India, cash market 8 lakh, future market HDFC Bank exposure is 8 lakh, so 16 or 17 lakh. So you are well within the 20 lakh. This type of funds are very, very famous. So they are called long short fund. In fact, in foreign countries, there are no such condition that, for 10 lakh rupees, you cannot take more than 20 lakh. So they have a freedom. So then what they do, sometimes, if suppose they take a bullish view, if they take a bullish view, 60% of the shares they will be having a long, 40% they will be having short. If they take a neutral view, 50% long and 50% short. Or if they are taking a bearish view, 60% short and 40% long. So they are allowed to play with this. But here you cannot do that because the moment you do, your exposure will go more than 20 lakh rupees. What my friend, just before coronavirus, he did this. Then unfortunately, the coronavirus came and then markets have fallen so much, drastically. What happened? State Bank of India also fell and HDFC Bank also fell. State Bank of India fell for about 5 lakh rupees and HDFC Bank fell for about 5.5 lakh rupees. So my friend has gained 5.5 lakh in short position, made a profit of 5 lakh in State Bank long position. 5.5 lakh rupees is the profit in HDFC Bank, 5 lakh rupees is the loss in State Bank. So on a net basis, he made 50,000 rupees profit. So for 10 lakh rupees investment, 50,000 rupees is the profit. It's okay, fine. But what has happened to him at the end of the financial year, when he declared his income to the income tax, so the income tax people told him, sir, you shorted HDFC Bank, so you made 5.5 lakh rupees profit. So that you are trading in futures and options, that is considered as a business income. So therefore, you have to pay tax as per the business. So for business, the taxation is, how much? For the hedge funds in India is 42.7%, almost 43%. So because, once your profit is more than 5 crore, you come to the nominal taxation, whatever they call it as, the highest bracket, that's about 43% tax. Sir, you made 5.5 lakh rupees profit in shorting HDFC Bank. Sir, you paid 2.5 lakh rupees tax. On the other side, you are having a loss in State Bank of India. Sir, that is a cash market. So, cash market loss is not a business loss. It is a capital loss. So, capital loss can be offset only against the capital gain. Sir, in future, if you make profit in cash market, so you can offset this loss there. But they are treated as a two different things. This is a capital gain or capital loss. This is business gain or business loss. So finally he was telling me, sir, I made 50,000 rupees profit and I had to pay 2.5 lakh rupees tax. So how can you make 50,000 profit and then pay 2.5 lakh rupees tax, right? Of course, it's a different story, that State Bank of India, recovered after that, he might have done. But still, there must be some regulation, to say that whatever the hedge funds, he could have chosen to do everything in futures market, he could have avoided, but he thought, when you go short in future, every month when you roll over, you get some profit. But when you buy it in the cash market, every month when you roll over, there is no rollover, right? So there is no. But if you have gone long in future, then every month when you roll over, you may have to lose some money. So he wanted to avoid that loss. That's why he took it in the cash market. But gone long in future, then he would have avoided this problem because he did not foresee this problem. So that was the issue. Number one, the SEBI should do away with this 2x leverage. And number two, the government of India should consider hedge fund as a entity, as a company. So whether they are doing it in equity market or they are doing in futures and option market, so everything should be considered as a business and it has to be taxed accordingly. So this kind of problem will not come. So this is the second thing. The third one, is there any other problem? Yes. There is something called alternate investment fund category 1, category 2, category 3. So these hedge funds come under category 3. So there is something called tax pass-through. That tax pass-through is available for category 1, tax pass-through is available for category 2, but that is not available for category 3. So what is the tax pass-through? Let us understand. What happens? Everybody pays some small money. Let us say every one of us pay 1 lakh rupees to a mutual fund. So 1 lakh, 10,000 people pay. So the mutual fund will get a huge money. So they invest it in the stock market. So whatever the profit comes, they don't pay tax. Whatever the profit comes, that profit is passed on to you and you will be taxed. What is the difference between you are paying tax and the mutual fund paying tax? Assume that this is considered as a business income. Of course, mutual funds is not considered as a business income, but they do only in cash market. But assume that it is done as a business income. So what happens? Mutual fund is a very big entity. There's thousands of crores are there. So definitely in 1 year, they are going to make more than 5 crore profit. The moment they make more than 5 crore profit in any business, the taxation is about 43%. But 43% tax paid, then what you get? You are going to get very little. Assume that, they don't pay tax, so they pass on the profits to you. So each one of us invested only 1 lakh rupees. So we are going to get only 40,000, 50,000 as the profit, each one of us. So then when we get 40,000, 50,000 as the profit from our pocket, we are not going to have more than 5 CR income. Assume that my other income, maybe 10, 20 lakh and I'm getting 40, 50,000. So, I might come under 10% or 20% or 30% tax bracket maximum. So my tax liability will be a maximum of 30%. Unless if I am also having more than 5 crore income in my personal account, then it makes no difference. But most of the people put the money in mutual funds. They are small people and they don't come under 5 crore category. So as an entity, if they pay tax, definitely it will go for the highest one, which is about 43%. Of course, it's a different story. If they are considered as a company, the company maximum tax is only 25%. But I am assuming that it is not considered as a company. The same way, coming back to the hedge fund, suppose everyone pay 1 crore, say 100 people pay 1 crore and coming to my hedge fund. So it is 100 crore. Okay, number one, suppose at the end of the financial year, so if I make, let us say, 50 crore profit. First thing is that my company is a hedge fund, is a company, but the company law does not apply. And I will not be asked to pay 25% tax. So I will have to pay marginal tax, which means that it will be taxed just like an individual. So because the total profit is more than 5 crore, I will have to pay nearly 43 crore as the tax. Then only the remaining money I can pass it to you, you don't have to pay the tax. But instead of this, if I am given a tax pass-through status, what will happen? The entire 50 crore profit I made, I will redistribute so that everyone will get only 50 lakh. When everyone get 50 lakh, for that 50 lakh, your taxation may be 30%. It may not be 43%. So this is called tax pass-through. An entity handling other people's money, whether that the entity is paying the tax or the entity does not pay tax and they distribute the profit to the clients, and the clients pay the tax. So that is called tax pass-through. There are three major issues why there are no hedge funds in India. So I have summarized it. Number one, so the 2x leverage clause. So that's the detrimental, and that's why, for such a big market, there are hardly any hedge funds. And number two, and hedge funds must be considered as companies, and company taxation should apply, not the nominal taxation. And number three, tax pass-through status must be given to the hedge funds so that, the profits will be distributed to the people and then they pay the tax. So if these three things change, then there will be huge number of hedge funds will happen in India, and that will be, eradicate these unofficial PMSs. That will solve a number of problems. So a regulator's job is to regulate the market, so not to, as I said, you simply ban everything, or you just put some conditions that nobody can do it, So when nobody can do it, the people go to illegal systems. And not only that, so I am setting up my hedge fund in Mauritius. So why should I set up my hedge fund in Mauritius? There are no conditions like 2x leverage, this and that. Of course, I am not going to trade in Indian market. I am going to trade in US markets only. But even if I trade in Indian market, still these rules will not apply. So the people who want to trade in Indian market also, so they do not set up an official hedge fund in India with the SEBI registration, but instead, so they choose to float hedge funds abroad, then they register as an FPI in India and they don't pay any tax also. The government does not get tax also, other countries get tax. So I'll be paying, I was told that I must pay 3% tax to Mauritius government for my hedge fund profits. If these things are done, so it's really good for the country. So it is for the SEBI to consider all these things. And here my job is to tell you why there are not many hedge funds in India. So hope you enjoyed watching this video. Thank you for watching.